Hi, welcome to the Market Alert for Thursday, the 12th of December 2024. So, sell bonds, buy everything else. Rate cut hopes soar as market shrugs off hot inflation number. Wasn't that hot. In line, US inflation solidifies a 25 basis point Fed cut with stocks buoyed by mega cap strength. And US stocks mostly saw gains on Wednesday, whilst in line with the US CPI. So what were those numbers? Let's have a quick look. We can see the detail here. Previous 0.3, 0.3, 0.3, 0.3, 0.3, and 0.2. So a slight increase there of 0.1, 2.7, 2.7, 2.6. Now that's more or less spot on, isn't it? Just a slight difference. I wouldn't call that hot myself, but that's what they're reporting there. I think the real world hot numbers are the increases that we're continuing to see. And yet we just see these paltry 0.1% increases, which we know is utter nonsense. But that's what the numbers were. So the rate cut is on for December, which I think is probably next week. Let's have a look. Just go through probably a couple of weeks, isn't it? 18th. Let's just move through. Fed. See anything there for the Fed? That's the UK, isn't it? MPC, FOMC. Oh, there you go. There it is. Yeah. So it's Wednesday the 18th. So Wednesday next, isn't it? So there you go. So that's that'll show a forecast to actually drop to 4.5. Right. Let's have a look at the market's reaction to yesterday's CPI numbers and kick off with the Dow. And in the Dow, you can see that we continue to decline. 1, 2, 3, 4, 5 days down now, heading towards 50% retracement there. Well and truly crossed through the 20-bar moving average there with the 5. The 50 EMA is an interesting place because you've got 62% retracement there, the golden ratio. So keep an eye on that. 30-minute chart, we saw the Dow move higher and then sell off on the cash market. Try to rally once more. Market actually retracing, if you have a look at this, from the high to the low to between 78 and 89 before prices then continued down. And overnight the market trying to get back above yesterday's low for the Dow at the moment. In the German DAX, still hovering around the all-time high, still showing some strength at the moment. The all-time high there sitting at 20,474. So let's just mark that onto the chart. We'll remove these fibs at the moment because if we just zoom in here a bit and make these slightly bigger, and then what we can do is just have a look, see how much strength it's got on the return journey back to the upside. So let's just remove these fibs where the market's gone through. So we're looking at the sort of 89 and 78 levels there. So keep an eye on those if you get a bit of a rally to the upside. The 89 is critical because when you get a change in trend, you get the market coming up, moving down, then rallying back, failing at 89, 78, and then continuing to move to the downside. So keep an eye on that. Doesn't matter what the time frame is, it works in all time frames. So yesterday the DAX once again managing to pile on the points to the upside in that retracement. But overnight prices have dropped, they've retraced and moving down. So what's on the downside? Well, we've got support for DP and the 50 EMA and the 200 MA and the BRN there, the big psychological level, or big round number as it's known for support. So in the S&P 500, again, if I just spread this out and just drop it down a bit, so you can see, again, get the fib retracement tool and you'll see the market stopping bang on 89% retracement there. Will it hold? Well, we'll have to see, won't we? The way to determine that is to look in a smaller time frame. This is the market's reaction to the CPI numbers yesterday. So what I'll be doing in here in a 30-minute chart, like I say, it doesn't matter what the time frame is, I'll go from the high to the low and then look at that number there, which if I just grab that in isolation, and you'll see there 6,090 is an area where I would expect to see further weakness, and that of course is the high from the larger time frame. And when you use larger time frames, it's a lot easier to trade because you can see the bigger picture, you can see the roadmap as it were. In the FT 100, market up yesterday, a bit of selling as the market moved higher though. Again, you've got all of your numbers there. Let me just drawing from there to there, and you'll see the market coming back 78.89 level. This is an example of what I was just talking about in the S&P. Let me just drag that over, and you'll see that once we hit that 78.89, the market reversed. But where did it reverse to? Well, to the support to the left, and also back into an area of just below 89. You've got the 200 MA and the 50 bar moving average there as well. So when you can see all of those things converging, gives you great areas of potential trades. 30-minute chart for yesterday, market up, market down, broke 100%, but then they bought back into the market. They tried to move higher, somebody sold in, and then all of a sudden the buyers, see the green bar there, came in. Then you get the supply as they take out the stops. So they absorb the selling and the market continues up. Where does it go to? 200 MA and also the R1 level there. Market pulls back towards the DP. And again, if you look inside of here, you've got an 89% retracement as the market comes back. How far does it come back? Well, not as far. We haven't got much that's actually dropping out of this, so we'll probably come back 38%. But you'll find these areas where the market comes back to. And even overnight, you'll see the market is trying to move higher. So from the last high down to this low, we're at 78% retracement, which is why the market's struggling a bit there. So what I would do is obviously spread this out a bit so I'll make it easy for you to see, and just drag it over. Is looking for why the market is struggling at this area. We know why, we've just covered that, but where's it going to? That's the important thing. Let me just leave those in so you can see where the market stopped. And now I'd be looking for this low up to this high of this bar when it completes, but it won't draw it on there while it's still in action. So I'll just go with the one before, and let me just do that again. So from there up to there, and that will give me a ballpark. And again, I can see these fibs tying in with the pivots, the 200 MA, the 20 and the 5 as well. We'll go below the 5. If it goes below the 5, then those are the areas to look for. And again, you'll see at this area it's where they bought back in, and yeah, it all ties in together. Right, let's have a look at the US dollar. So the US dollar still moving to the upside yesterday. I don't know why, because there's no chance of rates being increased, and that would create dollar strength. But that's not going to be the case. So you can start to expect to see some weakness there. If there's weakness in the dollar, you should expect to see some strength coming back into the metals. So let's have a look at those. So starting off with silver, stuck in a sideways channel at the moment, but holding, which is unusual, and at $32 as well, as we can see there from the real-time prices. Look at this in more detail, and yesterday they sold the market off, didn't they? And then in the morning they managed to bring it back. Again, have a look at this. These jump off the charts when you get used to seeing them. So the market pulling back there to 78. And also, if I go to this one here, from here to there, when it first pulled back, we're down at the golden ratio of 62. So when you're trading this in real time, you want to look for a convergence of all of these particular points. There we're up at the high from the previous day, so obviously 100% retracement or just over, and then the market pulling back. How far does it pull back? Well, you can see you've got that low there, and we'll just go from the low to there, brings you back to 78.89. Where's the market traded up to? Well, it's actually more or less 100% at the moment overnight, and there you'll see it's gone through 89 because it is 100% retracement there. It doesn't matter. If it's going through there, then it needs to drive through the high and whatever, so that's good news. If it can trade beyond 89, there's a good chance of it trading through 100% and continuing to the upside. Again, you'll see all of these small retracements, and in key areas when they do retrace as well. So in gold, this too moving higher as well. Again, you can see that we're just coming up to 100%. We've hit that overnight, so 100% retracement. We had some buying running up to that 100% as well. If this will hold above the 5, there's a good chance it will go on to make a new all-time high within the next few weeks. 30-minute chart, you can see the battering overnight, which is why when we look at the gold-silver ratio in a minute, you will see why it's moved to the downside. So yeah, we've got a retracement there. Again, if we go from these lines that are automatically drawn on the chart, we can see the market's more or less at this one, but if we want to see where the fibs retrace to, take the next one on the downside, brings you back to 78.89, and on the upside at the moment it looks like we've got a 50% retracement, 62 golden ratio there. So again, and we've got resistance in the 20 bar moving average. So what I would look for is a retracement here back down towards the DP of 89 with the volume coming in, and then a close back above the 5 MA for prices to move back to the upside. Right, let's have a look at yesterday's trades. And as you'd expect, yesterday the market very, very fickle, waiting for those CPI numbers. So we started off with a sideways move, which was already a precursor to what would happen for the remainder of the morning. The market trying to move higher there, failing to do so. Market slams back down, goes down to the 200 MA, goes and tests below it, gets some green inside of that red there. So you see prices then coming back. We're putting in a potential buy with a sell as well because of its side being sideways. Markets then move up and then come back down. So it was, like I say, it was already the template for waiting for the CPI, which is not unusual. And then it gets really quiet. And I'm going to whiz all the way through this because then we get the release of those so-called hotter than forecast numbers. Not much of a reaction. Market sideways and then comes back down, retests the 200 MA, and the market moving higher. Again, if you look from there to there, you will see these areas where they find support, and from there to there we get 100%, over 100% retracement. But we're at the 200 MA, we got the DP just below it, close back above the 5 MA, and then off to the upside. The afternoon, no trades at all, market just drifting up and down, retracing in Fibonacci ranges there. So there we go, moving back to the high after the stop of 4 p.m. trading, which is classic Murphy's Law, isn't it? Okay, that's it for this one, for this morning. So as ever, have a great day, and see you in the next one.